Good afternoon, traders. It's TK with ReadySetFutures.com. It's 6:04 p.m. Pacific Standard Time for the 4th of October, 2016, and this is your daily market wrap-up. Headlines on today, starting off at the ES. What a wild ride it was. Crude continuing to hold its own amidst today's turmoil. Copper completing our expected move. And the big story of the day, gold. I won't say I told you so. So let's get started with copper. We usually do start out with copper. What we're looking at here is copper on the hourly chart. We have two volume profiles. These are the volume profiles that we've had up now for a few weeks. Today's action continuing to sell off back into our volume, developing volume weighted average price. So this is what we had been expecting. Out of this 222 region, we said it might go up, but might continue to head down. We wouldn't be surprised if it did check back into this region around 216. Yesterday's action, we had also talked about, this being a surprise that we didn't come down a bit further. And it looks like today we did around 216 and a quarter. Do we have another leg down into the volume point of control on this instrument? Possibly. If you look here both at the at this longer term profile as well as the shorter term, and by shorter term, I do mean basically by the full month of September here extending into October. We might 215. You can see this newest volume weighted average price that's developing. It's now back into that point of control. It just says to us that this is a popular zone, right? This is fair value. Markets find fair value. And as we've now come through kind of this low volume area here, and we're trading back, on the other side of it, and so a move further down to 215, 216 to finish it out might be in store. Although this could be it. I'd expect some chop around this area, and if we continue to gain acceptance down here. Then I'd imagine that we move a bit higher in copper. But today's action again, off of the Globex, we sold back off around 219, back into the 216 area. Could have had some influence from the gold market, who really knows? Although copper obviously a much more true base metal than from an industrial uses anyway than gold is. So that's copper on the day. Why don't we head over to crude next? Again, this is our hourly chart. The overnight action here since the Globex open. This is the bit of a profile I put up there yesterday. It's actually it's not yesterday. It's since the OPEC ministers agreed to agree. And as you see, crude has traded above, through both of the resistance lines that we had anticipated holding. It did not. And if you look, this was right on the Globex open. This was from the API inventory report, showing just a massive drawdown in crude stocks, I believe of over 7.5 million barrels. That's enormous. Off of a expected build of like 1 million barrels. And again, this is the unofficial number. The EIA numbers come out tomorrow, but they've been fairly aligned. And the story continues with gasoline stocks, where those are missing on the high side significantly. And crude oil stocks have been exceeding expectations on the low side. This week, no different, but the big news was the 7-point-something million barrel drawdown in crude inventory on the week. So big rise up coming in on the market right on the open. We'll see if this continues to hold. This swing high up here at essentially $50, it's definitely within target. Coming back down to $48 to check the top of this resistance zone. Also a potential possibility. I wouldn't be surprised to see swings during the inventory report, once that comes out tomorrow morning. I would not be surprised to see, a full dollar swing or more on that. You see, we have two developing volume-weighted average prices, both here at around 46 and another around 47 and change, 47.30 or so. Also wouldn't be out of the realm of possibility to run down and touch that before moving higher. Keep in mind, this agreement to agree within the OPEC ministers isn't going to be settled until the end of November. They meet usually over the U.S. holiday of Thanksgiving, and that is on the table in Vienna. So we'll see. We'll see what the outcome of that meeting is. But I wouldn't expect a whole lot of action unless, of course, the deal just absolutely disintegrates in a very public way. I wouldn't expect a whole lot of action, from crude either up or down until we get there. That's crude on the day. Man, where do we want to go next? Gold or the ES? How about gold? Gold on the day, down. I don't know how else to describe that. $40 on the day, a good 3%. Just not a bid in sight. This is also the hourly chart. I'm gonna zoom it out just so we can kind of get a bit of perspective. Down here, these are the January lows, December lows, right? We moved up, consolidated, we moved up and consolidated. And we've been talking about, this move lower now for, I think you could probably go back to the very first video we put up at the beginning of September, expecting this move. As dramatic, yeah, we said, 1270, 1280 certainly was in range, but 1260 could also be on the tables. We could see a bit further down here in gold. Why is this, right? Why is this? Well, in order to move higher, right, we need to accumulate positions, and this is where the long or where the deep money can accumulate, and where much of the rest of us need to sell out. So, certainly business was done around, the bottom of these swings. If we want to zoom in, we can actually see. I'm going to get in here to the 5-minute chart. I know it's a little tight, but let's see, maybe not. Now, let me pause this for a second, guys, and let me get the right action up for you. Okay, so here we go. We're back. Now, all I did was I threw up a volume profile on today's action, just so you can see where some of the high volume nodes were. This was from the Globex Open. And so obviously we have our high volume node up here at the top, running down to about 1310. We had another one here, 1280 to 1283. These are going to be significant, guys. This is why I just wanted to point these out. And so when I zoom out just a touch, so I can bring in and so as you can see at these swings, we had around 1307, we had around 1310, and you can see this is where we had a fair amount of volume right around that first swing, but our second reaching in around 1307. Let's see, let's go back into that 5-minute where we had, if anything, around 1307. So we had a bit of action right here at 1308 before we just absolutely dumped for the rest of the day. So that's really our big story today on gold. Completing a move. I don't know if we're completing a move, but we definitely have executed a move, or we're in the middle of executing a move that we've been expecting for some time now. And as we said, and I still subscribe to the idea, gold's going to head higher. When is the operative question. Why this happened today? We did have some news coming out of the ECB and out of the Eurozone that said they were going to actually taper down their quantitative easing. And I'm sure you guys know, QE in Euro is still on. They're actually purchasing assets outright in their marketplace, but they're also purchasing $80 billion a month of Euro debt. And so there was rumors, or more than rumors today, that the Eurozone would actually begin to taper that off. And so monetary policy begins to normalize, the price of gold goes down. If you do believe or subscribe to the idea that gold is real money and everything else is fiat, tinfoil hats aside, That is probably the best way of thinking of gold, at least in my opinion. Now, turning over to the ES, an additional great story today. I have 3 volume profiles up. The big one since Brexit, we've been looking at that. The second one here is from Yellen's hawkish hold. And then this most recent one was today's action. So we're back down here trading at the lower, kind of vertice of this triangle. Today was a wild ride in crude. Not crude, but the ES, excuse me. My signals have been short on crude. I had an order on the book throughout the overnight at 2162.5. Unfortunately, we didn't get there. I was kind of bummed. And I did have an opportunity to kind of watch this unfold throughout the day. The thumbnail pick is actually from some of the midday action in the ES. And I revised that order back up to 2160 once we kind of reached up to this high volume node around 2157, and unlucky, wanted in and didn't get it, unfortunately. So I try my hardest not to chase these markets throughout the day. I believe that we'll still see a press up in the ES. The catalyst for it, I don't know, but I believe that we'll still get a move up. The trading today was choppy and it was fast. Quite good correlation with the VIX today, and but it couldn't really hold the bid once we got down past 2153. That's been the magic number. We've been talking about that for a number of days now. It's also this high volume point since the Brexit, stretching it all the way back out here. This big thick green line you see right in the upper third, that's 2153, folks. 2153. That's also the volume weighted average price that we've experienced since Yellen's hawkish hold. 2153. I'm going to keep saying it. We're down here now at 2141. This has been kind of the acceptance area. This is also our volume weighted average price since the Brexit vote, which is we continue to trade off of it, as you see over here. The past really about around the past month, it's all about been trading up and around 2141. So will it continue to be that way? I don't know. I do have an order short again on the board, holding for the overnight. We'll see how it goes. I'm up here around 2153. Actually, no, I take that back. I'm up here around 2160. My target is this upper value area boundary. So, but today's trading was nice. So you can see since Yellen's hawkish hold here, we came down and we traded right into that lower value area boundary, as well as the longer lower value area boundary from Brexit down to 2136. So you can see there's a bid down here. It was also bid back up last week. Continues to be an important area. So we'll see how it goes from here on out. That's what we got for you today, traders. It's the 4th of October, 2016, your daily market wrap up. If you like it. As always, it's your money, it's your account. To all of our new subscribers and our new viewers, thank you very much. We really appreciate it. Go ahead and leave some comments. I do like reading them. I try to get back to you guys in a timely manner. So that's it, traders. Best of luck, and we'll check you tomorrow for another great daily market wrap up.